Welcome back to another video. This is day 41 of Project 365. The time is 9:50, the Thursday the 29th of 2025. So what happened? 3 days ago on the 26th of May around 11:30 New York session, I shorted S&P 500 2 units, and after 3 days, 29th, which is today at 9:16 a.m. in the morning, 9 o'clock in the morning, I lost 350 bucks. But it's okay. I took a gamble. I thought the market is going to go back to a gap that formed on the 11th of May, and in between the 11th of May and the 12th of May. Unfortunately, the market did not move the way I wanted it to move. Fear not. We only lost about 300 bucks from my overall account. So I had a $50 gain before, prior to entering that trade, and then I lost that. On top of that, I lost another 200 bucks. So overall, my account is down by 300 bucks. So what do we learn from here? Do not buy out of emotions. You need to have not just one confluence, you need multiple signals, like multiple confluence to enter a trade, either for a short or a long position. So now, what can we do? We need rules. We need to play by a set of rules. We need to have a discipline. And every time when you go back to the same routine discipline, you can actually track what went wrong or where did you go wrong. So today we're going to take a look at the indicators. How do we use indicators to our benefit, and how can we enter a winning trade using just simple indicators? Whenever you trade, say for example, a stock market or a foreign currency or anything, financial instruments, that's right. So anytime when you trade an instrument, you need to have two types of analysis. One is fundamental analysis, and the other one is technical analysis. Fundamental analysis is pretty much understanding what's happening in the news. What drives the price to go up? Say for example, the Trump trade wars and the tariff. That is a huge fundamental analysis, panicked the whole market, and then everyone started shorting, started dipping constantly, and that's exactly what Trump wanted to do. The US dollar was so high, he wanted to bring down the US dollars. Everyone was using US dollar to trade, everyone was taking US dollars from US, but no one's giving it back to the US. You might have noticed Apple, they started bringing back all their phones that was made in made in China. They brought everything to US, or they shipped some to India to manufacture from India, and everyone started selling their shares. Everyone just started shorting it. So that's exactly what happened on, on the first week of April. But then what happened? So anytime when the market goes down, it will correct back itself, which is exactly what's happening right now. So the market moves up and down certain number of pips. Do you want to be in the trade that long? Do you want to be in a trade for 3 days? Is that what it's called, day trading? I think that's more of a swing trading. Like you're there for like a big swing. Enough of yapping. So that's the fundamental analysis. Technical analysis is reading the charts. Sometimes you can actually make money just by reading the charts, but you need a discipline. What do I mean by discipline? It's not like you have to sit at the table every single time at the same time, start trading at the same time, make the same trade. No, what I mean by is you need to play by the rules. You need to have a set of rules, or you need to have multiple confluences. You need to use indicators. You need to use not just one indicator, maybe multiple indicators, and see if this is the right opportunity to either sell or short it. Today we're going to use pretty much the same idea. So let's see. Command Shift 5. We're looking again at S&P 500, and the market is about to open in about 5 minutes. And how do we know? So the market is opening. The New York session is opening right now. As you can see, New York session is the most, there's a lot of traders in New York. They love to trade. And you can also see the London session is still going on, which means the people in London are trading, and at the same time New York is also trading, which means there's more volume in the market. So that's exactly when you want to trade. You don't want to be trading when everything's dying down. You want to be trading when everything's going up or going down. So now that we know New York session's opening, the London session is live, let's go back to our charts, and we're going to trade S&P 500. But instead of using 1 day time frame, we're going to go down, narrow down to like 1 minute. Today we're going to use an indicator called stochastics. There's so much I can explain about stochastics. Dude on what's it called, Day Trading Radio, I think. He made it very simple. You need to use 4 different types of stochastics. Basically, I'm going to just get rid of everything. Remove drawing tools and indicators, everything. So let's start with a clean slate. There's nothing to worry about, like, losing your first trade. It happens. Even at the bottom, it says 76.8% of retail client account lose money trading CFDs with this provider. You should consider whether you can afford to take that high risk of losing your money. Does that mean you have to stop trading? No. Thomas Edison, he failed apparently 1,000 times before inventing the light bulb. Nikola Tesla, he failed so many times. In Batman, there's a line of when Batman falls into the well, his dad picks him up and asks him, "Hey Bruce, why did we fall?" Because we learned to pick ourselves up. That's exactly what we're going to do. We're going to learn how not to make the same mistake, emotional buy, just randomly gamble on like trading platforms. So today we're going to use, like I said, 1 indicator, but at 4 different intervals. Okay, so in that day trading radio YouTube channel platform, he uses a terminology called quad rotation. You need to have a green flag in all the stochastics and then you enter the trade. So he uses a stochastics or fast stochastics. Go to indicators and let's add those. Yeah, so we have only stochastic, we don't have fast stochastics. However, fast stochastics is available on the mobile version, but because we're using desktop, we'll just use stochastics. 1, 2, 3, 4. And all the 4 are pretty much the same indicator. We're going to go and change the inputs. What inputs are we going to use? So basically, I took a screenshot of his fast stochastics, but unfortunately, I don't have fast stochastics indicator on my desktop version. However, it's available on the mobile version. So I'm going to upload a photo and ask ChatGPT, what should be my values if I don't have the fast stochastics? Let's see. Okay, length is K, smooth K is slowing down, slowing, smooth D is D. So now, perfect, there you go. This is exactly what we need. So in length, I'm going to put 9, smooth K, I'm going to put 1, and smooth D, I'm going to put 3. So in his video, he uses like 1 minute time frame. So we are looking at my day time frames. So we're going to go down to the time frame to 1 minute. Okay, you can clearly see that we are in a downtrend. Let me do a quick trend analysis. Okay, that looks like a trend. A trend is when you draw a line, it should be like 3 or more than 2 touches. So there's 3 touches. That to me is a downtrend. If I want, I can even make it steeper. Okay, as you can see, that's already like 3 touches. We are in a downtrend. So you don't want to be looking for buy positions. You want to be looking for short positions. Okay, so we know we're not going to just emotionally buy just because it's a downtrend. We're not going to go and put a sell order. We need multiple confluences. How do we know it's multiple confluences? Okay, I'm going to take off the percentage K. It's kind of like useless because it's 1 anyway. So there's no point in having that percentage K. And then we're going to add more indicators. What are those indicators? We're going to use the smooth moving average. But the moving average also confirms when it's in red, orange, green. 250, 21. When it's down like that, you want to look for short positions. This section where the area of confluence. I'm going to draw a big purple circle here. Alright, let's look at this area here. That's the first time. Maybe I might bring down the color a little touch. There you go. See that area over there where everything is just crossing path. So the green is going up, but the orange, but then the order just changes. Red, orange, green. Okay, that's your first confluence number 1. So now the market has gone down. Doesn't mean it's going to keep going down. It might flip back up. So that's your first confluence using the smooth moving average indicator. And the second one we're going to use is the stochastics. All right, under the stochastics, all the way at the bottom, after 1, 2, 3 red candles, you can see, are we in a downtrend or in a, like, is it like it's giving you a false breakout? So if we look at the stochastics, it lost its momentum. Stochastics pretty much shows the momentum of the market. So the 9 is using the 9 candles, 14 is using the 14 candles, 40 is using the 40 candles, and 60 is using the 60 candles. Okay, what does the momentum mean? Let's say, for example, a rocket, right? Maybe I'll take this. Let's use this rocket or airplane as an analogy here. So when a rocket's going up, there's engine thrust. As soon as it loses its trust, it's not going to go, it's going to continue traveling. Inertia or momentum is there. There's a momentum. So even though the trust is gone, it's going to continue going up like that. And then it will start to go down. So as you can see, the momentum has dropped in the first 9 candles, which means, let's say, for example, instead of 9 candles, let's assume 9 people. So the first 9 people have started to, let's say, short it. Boom, the trust is off. But then 14 people is following it, and then 40 people is following it, and then 60 people is following it. Boom. That is when I will enter a short trade. Exactly over here, I'm going to mark a vertical line, option V. I'm going to change the color to nice solid blue. Maybe not a solid line, I'll put a dash line. Okay, as you can see on the vertical line over there, right? It's aligning up. So when all those people are in a sell position, that's when you enter. This is the point. This is the area where you would enter. Maybe I need to put a nice arrow. Where's the arrow? Arrow. Ah, perfect. Boom. Okay, see where the arrow is pointing. See that? That's where I'm going to enter like a sell short trade. All right, let's see. We're going to go for a short trade. 1:2 ratio. The RD always says you don't want to risk too much money. So you just want to go 1:2 ratio. So that is 1:1. So let's say you enter a short trade here and then you're targeting 1:2 ratio. Boom. Look at that. That's an easy win. Easy money. So I'm going to enter here. I'm going to change this to maybe red. Boom. By, let's say, you want to start taking your money out at the 1:2 ratio. So 29, 11, 32. So you enter the trade on the same 29th of May, 10:03. 10 o'clock in the morning. So 10:03, you enter the trade, and then you would have exited the trade at 11:33. Within like an hour and a half, you've made 1:2 profit ratio. There you go. And let's see how many pips is that. That's 24 pips. 24 pips in an hour and a half. And that is day trading. That's how you day trade. You don't just simply go and gamble. I'm sorry, the battery died, the camera battery died. I'm still waiting, I haven't entered any trade yet. I'll find a really good trade, I'll enter a really good trade. I don't know when, how long it's going to be. So I don't want to keep recording at the same time. So what I'll do is I'll continue, the market's just open, it's only been 40 minutes. So I will usually want to trade the first 2 hours or 3 hours of the market. And that's when a lot of traders will enter, that's when a lot of volume is. Basically, I'm going to continue monitoring the trade here for the next hour or so, patiently wait, and I'll get back to you guys. And when I see a really good trade, I'll hit record, and if I don't get it, I won't have it. So that's it for day 41. In day 42, hopefully, we'll catch a really good trade, a good run. Yeah, that's pretty much it. Thank you for watching. I don't know, today's video is a lot of yapping. I don't know if you guys understood what I'm trying to say. I'll get my thoughts collected, I'll write a list, I'll make a proper script, I'll go through a proper technical analysis, top-down analysis. But for now, we don't have a good trade yet. We can only look for sell positions at the moment because the moving averages have flipped, and we don't just look at the stochastics or the momentum. We look at the trend, we look at the moving averages, and then we then confirm it with the momentum indicator, which is the stochastics. Today is big L when it comes to the trade I took 3 days ago on the 26th of May. We lost about 350 bucks. Overall, I'm $300 loss, 99,699 Australian dollars left in my account. Thanks for watching. Peace.